In a stunning turn of events, the Chinese yuan has surpassed the euro, signaling BRICS dominance over Europe in the global economy. What implications does this shift hold for international trade and financial stability? Stay tuned as we delve deeper into this groundbreaking development. As of September 2023, the yuan has surpassed the euro to claim the position of the world's second most utilized currency in SWIFT trade settlements, representing 5.8% of international payments. This transition signifies China's expanding economic influence and its endeavor to globalize its currency, with BRICS playing a pivotal role. This recent development underscores the escalating importance of the yuan in global commerce and finance, underscoring China's economic advancement vis-à-vis Europe. In this video, we aim to delve into the current status of two major currencies, namely those of China and the European Union. We will examine the strategic objectives of both regions concerning their currency futures and analyze how China's affiliation with BRICS has bolstered its position in global trade. Let's begin by examining the factors contributing to the yuan's ascent compared to the euro. The yuan's upward trajectory has been propelled by international borrowing from Chinese banks, facilitated by lowered yuan interest rates. This surge in borrowing through yuan-denominated bonds and loans has notably bolstered the yuan's presence in global finance, primarily within China's domestic sphere. Record highs in the issuance of panda and dim sum bonds highlight a significant surge in the yuan's utilization, particularly in trade finance, where it has surpassed the euro in recent times. However, the journey towards becoming a global reserve currency entails more than just a surge in trade finance. The yuan still grapples with challenges related to internationalization, including limited circulation of international yuan bond proceeds and predominant usage within specific bilateral channels rather than on a global scale. While the yuan's international standing is on the rise, its usage remains largely confined to countries with amicable relations with China or those participating in initiatives such as the Belt and Road Initiative. Within BRICS, trade among member nations holds promise for enhancing the circulation and value of the yuan, primarily through endeavors to dollarize and promote local currency transactions and loans. The establishment of the new development bank by BRICS nations exemplifies such efforts, with its issuance of renminbi-denominated panda bonds and provision of loans in local currencies. This strategic move not only reinforces the yuan's usage within BRICS, but also aligns with a broader strategy to lessen reliance on the US dollar. Moreover, China's strategic launch of yuan oil futures within the BRICS framework seeks to challenge the dominance of the US dollar in global oil trade by advocating for the use of renminbi and allowing it to be convertible into gold. This initiative not only enhances the international standing of the yuan, but also supports BRICS' objective of dollarizing critical global trade segments. The success of yuan oil futures underscores the potential for augmenting the yuan's circulation and value through intensified trade among BRICS nations, particularly in vital sectors like energy. Additionally, a mathematical model examining trade currency preferences, TCP, among nations suggests a growing inclination towards favoring trade in Chinese yuan over the US dollar. This trend indicates a structural advantage for countries, including BRICS members, to diversify away from the dollar, potentially paving the way for a new BRICS currency, BRI, to facilitate trade within the bloc. These findings underscore significant interest and readiness among nations to reduce dependency on the dollar, which could ultimately benefit the yuan as BRICS nations strengthen trade ties and financial cooperation. The future outlook for both the yuan and the euro amidst various election scenarios in Europe and the US necessitates a comprehensive consideration of geopolitical and economic dynamics. Concerning the yuan, China's economic strategies and international engagements, particularly with the US and European nations, assume paramount significance. The outcome of US elections holds substantial sway over US-China relations, impacting trade policies, tariffs, and overall sentiment towards Chinese investments. A US administration adopting a stringent stance towards China could precipitate a more volatile trade landscape, potentially affecting the stability and global standing of the yuan. Regarding the euro, elections within European Union member states, as well as European Parliament elections, serve as pivotal determinants of the currency's trajectory. A shift towards populist or Eurosceptic political parties could undermine EU cohesion, influencing fiscal policies and the bloc's approach to economic challenges. For instance, a pivot towards fiscal conservatism or austerity in major economies like Germany or France could fortify the euro by fostering fiscal stability. Conversely, political developments that undermine EU unity may introduce uncertainty and weaken the euro. The economic policies implemented by newly elected governments in Europe also wield significant influence over the euro's course. Policies geared towards fostering growth and stability within the EU are poised to bolster the euro, whereas contentious or fragmented political landscapes may impede effective economic decision-making, potentially diminishing the currency's strength. Moreover, Brexit and its negotiations have previously demonstrated how political events can trigger fluctuations in the euro's value. Future elections that usher in governments with strong stances on EU membership or EU policies could instigate similar volatility in the currency's valuation. Additionally, the relationship between the US and the EU concerning trade sanctions and regulatory cooperation can exert notable influence over the euro. A US administration advocating for multilateralism and strengthening ties with European allies could augment the euro by fostering increased trade and investment between the two regions. Digital transactions, particularly via central bank digital currencies, CBDCs, are experiencing significant advancements in both China and Europe, with the potential to reshape the future dynamics of the yuan and the euro. In China, the digital yuan, also known as ECNY, has witnessed a notable surge in transactions, reaching 1.8 trillion yuan, approximately $249.3 billion USD, by the end of June, up from over 100 billion yuan previously. This underscores China's leadership among nations developing their own CBDCs, primarily utilized for domestic retail payments. Although the circulation of ECNY constitutes a small fraction of China's money supply, it facilitates a substantial number of transactions, indicating high efficiency and velocity. Chinese state-owned banks have engaged in trials focusing on cross-border transactions, demonstrating the potential for international utilization. In Europe, the momentum surrounding CBDCs continues to gather pace, with the European Central Bank, ECB, announcing a preparatory phase for a digital euro. This phase aims to lay the groundwork for a digital equivalent of cash, offering offline services, maintaining robust privacy standards, and enabling instant settlements. The preparatory phase is slated to span at least 2 years, concentrating on finalizing a rulebook, selecting providers for platform and infrastructure development, and conducting rigorous testing. This underscores the Eurozone's dedication to spearheading innovation in digital currency, potentially revolutionizing the financial landscape. The impact of digital currencies on the yuan and euro could be profound. For the yuan, digitization aligns with China's aspirations to bolster its global economic influence and diminish reliance on the dollar. The digital yuan could facilitate more streamlined cross-border trade and financial transactions, potentially challenging the euro's prominence in international trade. However, the Eurozone has an opportunity to sustain its significance by crafting a digital euro grounded in European values, ensuring it remains abreast of the global economy's digitization. As digital transactions evolve, both the yuan and euro may witness shifts in their international standing, influenced by the adoption and integration of CBDCs. The development of digital currencies represents a significant stride towards modernizing financial systems, with the potential to enhance efficiency, curb costs, and unlock fresh avenues for global trade and investment. How do you think the emergence of digital currencies will impact global trade and finance, particularly concerning the future of the yuan and the euro? Feel free to share your insights in the comments below. Join the Revel Discovery community by subscribing and stay updated on this critical shift in global economics. As we explore these significant developments, your perspective is invaluable. Keep engaged with us.